Good afternoon, everyone. Welcome to our online seminar on resolution planning in practice. My name is Pierre Schlosser, and it is an honor and a pleasure to introduce and moderate today's seminar with Mauro Grande, member of the Single Resolution Board and member of our Advisory Council, and Sophie Steins Bisshop from the Single Resolutions Board's Directorate for Resolution Strategy, Processes, and Methodology. Mauro, Sophie, thank you very much for being with us. I am certain that I'm not the only one to be very eager to understand better the ins and outs of resolution planning and can't wait to hear more about it. As you may know, the Florence School of Banking and Finance is a recent program of the European University Institute. The EUI is a postgraduate public and international research and education institute located in Florence, Italy, which since 1972 offers PhD programs in social sciences and more recently has added executive education courses to its portfolio of activities. As an executive education and policy dialogue platform, the Florence School of Banking and Finance strives to be a place of dialogue, learning, and exchange, a place where the new and the older generation meet to discuss recent and cutting-edge topics of financial stability, risk management, as well as crucial issues of banking regulation, supervision, and resolution. All this for Europe's common good. Therefore, on top of our annual conference, our online seminars, and our closed-doors executive seminars, we offer numerous executive training courses every year, both in residential and interactive online formats. The more than 850 experts who we have trained so far are mostly active in European institutions and agencies or are part of national central banks, but not only. Looking ahead, we have several residential courses coming up next on bank regulation and systemic risk in Florence, that's next week, on regulation of shadow banks, that is at the end of October, and on banking resolution precisely together with the School of Transnational Governance. This last course is however already fully booked, but you can join the waiting list. Our 2018 courses will be put on our webpage very soon. As an appetizer, those two slides offer you, however, a snapshot of what you can expect. As you can see, there will be a good mix of introductory, intermediate, and advanced courses and a varying thematic and methodological focus. So stay tuned and do not wait too long to register. Okay, now, this being said, let me switch gear and reach out to you, the audience, you in front of your computer or tablet at work or at home. You are around 100 participants today, following us from everywhere in Europe and the world. 39 nationalities are represented today. Most of you are from Europe, but time and again, we're very glad to also welcome participants from the South African Reserve Bank and from Banco Central do Brasil. We're very happy to count on several participants from the SRB, the ECB, the EBA, the Madrid-based FROB, as well as representatives from Ernst & Young. Beyond this, there is of course a fantastic diversity of participants and organizations, which we have summarized in our word cloud. What else can I tell you? Well, 45% of you are women, 55% are men. This is even more balanced than our last edition. Moreover, for the third time in a row, you have around 7 years of professional experience on average. What else? Half of you are trained economists. Then come the lawyers, then the business-trained people, and other profile. Lastly, most of you have a master's degree, while 20% of you have a PhD and 10% a bachelor degree. Right, once again, very grateful that so many of you are with us today. So how do we take it from here? Well, Mauro will first provide us with a 20-25 minute presentation. Like always, it will be punctuated by 3 polls, 1 at the start and 2 just before the Q&A, where you will be asked to provide your anonymous views on a given issue. To ensure that you have sufficient time to share your views, we'll then immediately move over to the question and answers session, during which both Mauro and Sophie will engage with your comments and questions. Let me stop here, disappear, and leave the floor to Mauro. Mauro, you have switched on your camera and mic, so please share them now with the platform. I'll tune back in for the Q&A. Mauro, the floor is yours.
For your kind introduction, and good afternoon to everyone. I hope everyone can hear me. It's the first time for me that I do this kind of thing, so I'm really excited about this new experience. As you said, Pierre, the purpose of this presentation is to explain how we do resolution planning in a concrete way. I should say in general that resolution planning is the main activity of the Single Resolution Board and of any resolution authority in normal times, and is meant primarily to allow us to be well prepared in case we have to handle a concrete banking failure. I should also highlight in general that resolution planning for all of us is a learning by doing process, because this is a completely new activity which, as you know, was introduced in the EU framework by the BRD. Now, I intend to go very quickly through all these elements, and let me start, for those who don't know the Single Resolution Board well, with a few elements which characterize our institution. First of all, the SRB, as you know, is part of a system, the Single Resolution Mechanism, which is composed also by the national resolution authorities. This system is the second pillar of the banking union, which has the main task of ensuring that when a bank fails, let's say the failure is handled in an orderly way, in such a way that there is a minimum impact on the real economy as well as a minimum impact on the public funds. The SRB is responsible in terms of resolution for the same banks as the European Central Bank as a supervisor, but here there is a difference. We are responsible also for other banks, notably the cross-border banks. Cross-border banks are the banks which have at least one subsidiary in another country than the one where they are established. This means that our sample of banks is a bit larger by a measure of currently 15 banks, more than the SSM. Clearly, NRAs have their own responsibility for all other banks. We call them less significant institutions, but we exercise an oversight function over this activity of NRAs in order to ensure that some degree of consistency is accomplished in the way in which NRA discharge their responsibility. All in all, it's very important to emphasize that in everything we do, we collaborate very closely with the national resolution authorities. And before turning now to the next slides, I should point to, let's say, the first poll question, as Pierre said. We're asking you what is one of the triggers for resolution, and I'm going to explain in the next slide, this particular aspect. So for you now to answer to it. Turning then to the main task of the SRB or of any resolution authority, you can group them in three main groups or clusters which reflect in a way developments in an individual bank. We can say there is the normal time, business usual, and that's where the resolution planning activities plays clearly a major role. I will go into the detail of what this means. I would add at this stage that another very important task of the SRB is to manage the Single Resolution Fund, which is there to provide financial support in exceptional circumstances in case the internal resources for financing a resolution action are not sufficient. Then a second group of activities relates to that period where there are first signs of financial difficulties in a bank, so when the supervisors increases his degree of attention, and that's the moment when we also increase our level of alertness, because that's the moment when we don't know yet whether the actions that the supervisors are taking will succeed, or the bank might go, in the worst scenario, into resolution. And if the second option is the one which materializes, then we enter into a phase which is the determination of whether the bank is failing or likely to fail, which is the preconditions for entering into resolution. And there are three main elements here which are relevant. The first one is indeed the determination of the banks failing or likely to fail. Primary responsibilities for the ECB here, but the SRB can also have a role. Then the second condition is the determination of whether there is any residual action, either of a supervisory or private nature which might still avoid resolution. And third, I will come back to this point, whether the resolution is in the public interest. And the final stage is the one where indeed all these conditions for resolution have been met, and then it's for the resolution authority to take a decision about the best resolution approach, based of course on the resolution plan which has been prepared ex ante. And that's the moment where a number of more technical aspects but also important, like valuations come into place. So clearly the answer to the question which was raised before is that, you know, it's primarily a responsibility of the ECB of banks to determine if failing or likely to fail. Then, starting with more general consideration about the preparation of resolution plan, the first aspect I would like really to emphasize is that maybe contrary to what is the common perception about these resolution plans, more than a product, are really a process. It's really an ongoing process. And this process includes various steps. I mean, the first fundamental step is, you know, to come to the conclusion as to whether resolution is indeed the best approach for a bank versus liquidation. So there is always a need to make a comparison between resolution and liquidation. I will come back to that aspect. Once a determination has been made that resolution is the best approach, then the following step is to determine what is the best resolution strategy. And that's where questions like, you know, single point of entry versus multiple point of entry or hybrid approach come into play. These are very much choices which will be dependent on primarily the structure of the group which is under consideration. The following step would then be to decide on what is the most appropriate resolution tool for the bank in question. As you know, the legal framework provides for 4 resolution tools: bail-in, sales, then sales of business, then asset transfers, and well, I come back to that. Then after that, the next step would be to identify obstacles to the feasibility of the resolution approach which has been identified. If there are obstacles, then the following step would be to find ways to remove this obstacle in collaboration with the bank. And final step would be the determination of the MRL, so minimum requirement on eligible liability. As said, all this is a process. We are now in the phase of still trying to complete, if you wish, a first circle. In a steady state, when we have completed this process, what will happen is that periodically we will review all the steps to see whether there is a need to update the plan in light of changes which primarily will relate, let's say, to the business and structure of the bank. Along the same line, given that we are, as I said, still in this initial phase of having a first set of complete resolution plans, we have adopted a gradual approach. Notably, over time, we try to develop more and more plans for the bank. So we started in 2015 at the beginning with very simple plans. We called with internal jargon transitional plans, which contain some basic elements like the strategic business analysis, the preferred resolution strategy, first identification of impediments to resolvability. So we did this for the first round of plans. Then the following year, which was 2016, we developed further, let's say, certain chapters, and we added new elements. And we tried already to have some first consideration about MRL. And then now in 2017, we are at a further stage of development, where once again we try to develop more certain chapters of the resolution plans, and the most important element is that for the first time now, for the resolution plans in 2017, we try to determine to the first determination of binding MRL at consolidated level. A point to be emphasized here in the preparation of the resolution plan is the importance of what we call the policy work. It's clear that the further development of the plans and the completion of the plans draws to a very large extent also on development on policies on elements of the plans. And on the right-hand side, you see, a number of aspects on which policy have already been developed or are in the process of being developed. Now, this policy, of course, have the main objective of ensuring that the resolution plans are drafted in a consistent way, within the single resolution mechanism. And I should highlight that, let's say, the cooperation I mentioned at the beginning between the SRB and NRAs, manifests itself also in this domain, and we have structure in place to ensure that the definition of policies is done in a way which benefits from, let's say, the expertise which exists also at the national level. Clearly, let's say, the development of these policies in a way is a precondition for allowing us to make further process towards the completion of the resolution plans. A last element, general element, which I would emphasize is the fact that the preparation of resolution plans is also the result of an interactive process with the many stakeholders that the SRB, as any other resolution authority, has. As I said, we work in very close collaboration with the national resolution authorities. We do that through specific teams, which are very similar in a way in terms of notion to the teams that the single supervisory mechanism uses for carrying out supervision. And so these teams are the main engine to work together to prepare the resolution plan. As you know, when it comes to those banks which have a presence outside the banking union and in other countries of the European Union, we are somewhat obliged by the legal framework to collaborate with them through resolution colleges. This was one of our main tasks at the beginning, to establish resolution colleges for all the banks for which we are responsible, which have a presence outside the banking union. As you know, if the presence of these banks goes beyond the European Union, then we are under, let's say, the aegis of the Financial Stability Board, which recommends that discussion among relevant authorities take place within crisis management groups. So these are, all mechanisms which should ensure that we have a good collaboration with all relevant resolution authorities. On top of that, of course, we need to maintain very good relationship with, first of all, the ECB as a supervisor, because a lot of information which is relevant, for the resolution planning work is of a supervisory nature. So we need to have a very good collaboration and exchange of information with them. This applies also to the European Commission, which, as you know, is an important player in the decision-making process when it comes to taking decisions on resolution. And also the European Banking Authority, being the authority responsible for, let's say, developing and maintaining an handbook also for resolution. Of course, it's very important for us to have a very good collaboration with them. Now, turning a little bit more into the detail of resolution plans, as said, there are four main components of a resolution plan. The first one is the strategic business analysis. That's basically the mapping of the banks and the banking group, geographical footprint, identification of critical function, level of connectedness among the different parts of the group. These are all elements of this first very important component of a resolution plan. The second main component is the preferred resolution strategy. This is a key element because we would identify in this context, as I said, what is the general approach, SP versus MP versus hybrid, and the specific resolution tool that we would be, let's say, applying in case of the bank failure. The third element is the resolvability assessment. Once the strategy has been identified, once again, it's very important to make it sure that this can be implemented in practice, and there are many issues which might relate to the feasibility of of an identified resolution strategy and approach. A last component, once again, is the, let's say, adequate level of internal resources, MRL, which is supposed to be there to ensure that there are sufficient internal financial means to finance the selected resolution approach and strategy. Now, let me go through maybe a couple of points, across these four main elements of the resolution plan. And the first is critical functions. Critical function is a key topic in the context of the resolution planning. It is a key topic in the context of the strategic business analysis, but it's also key for many other things, like the public interest assessment, the issue of separability, in case this is supposed to be the main approach in case of resolution. So it's really a topic which has manifold applications, if I can say so, in the context of resolution planning. And clearly a sound way of identifying critical functions in a bank is a fundamental objective of the resolution planning activities. What is a critical function? There are two conditions. First, it needs to be a function which is provided to third parties, and it needs to be a function which, in case it is discontinued, it would create a significant impact in the real economy, either in terms of disruption of services to the economy or in terms also of financial instability within the financial sector. In that sense, it's something different from other concepts which look very similar, like, critical services, which are important but primarily for other entities of the group, or core business lines, which are also provided to third parties but are more relevant, in terms of impact they have for the profitability of the banking group, and not really for the outside world. The key point here is that we did a lot of work as a resolution authority to try to define an approach to identify critical function which would be, as consistent as possible. And so we identified a methodology for assessing a critical function. We identified indicators for, this exercise. In a way, these represent the quantitative part of this exercise, but we recognize also that there are qualitative elements in the judgment of critical functions. All this is reflected in, in the methodologies that we have identified. And the key point, I think, is that this methodology was in close collaboration with the ECB, so that we have a common approach to this issue of critical function, both in the context of recovery plans and in the context of resolution plans. The concept remains that there is first a self-assessment by the banks themselves as to whether, they perceive that certain functions are critical, and then there would be a sort of valuation by, by the SRB, by the team who are looking at the bank, in terms of, questioning and checking really the extent to which the self-assessment can be then in the end fully supported. Very important part of the resolution planning work, this one. Another very important component is indeed how we identify in a way the best resolution strategy and tools. And here there are, different questions to be addressed. The first one is, and this, as I said, is the beginning of the entire resolution planning process. Is this bank eligible for resolution or for liquidation? And this is the result of an assessment of whether, in a way, resolution performs or achieves certain public objectives better, let's say, than liquidation. And as you know, the legislation provides for a number of public objectives. They are listed on the right-hand side at the top, the box with the green heading. All these objectives are clearly important, but the first two, ensuring the continuity of critical functions and avoiding negative effect on financial stability are clearly the, in a way, the most relevant. So what we need to do at the beginning of the resolution process is to make a judgment ex ante as to whether, looking, at the way in which resolution would satisfy this objective versus liquidation, we make, our own, conclusion. And I think a point that I would emphasize, in light also of maybe the first experience we had in terms of resolution cases, is that, this judgment somewhat may vary over time, notably the kind of conclusion you might achieve with regard to this assessment ex ante at the moment when deciding as to whether or not to go for resolution versus the moment when the bank is failing or likely to fail, and so you need to go into actual resolution. You need to redo this kind of assessment in light of the particular conditions of the bank or the market at that particular moment. The judgment might change, and that's exactly what happened in the case we had at hand in our first resolution cases. So always bear in mind, that this judgment, this public interest assessment, is somewhat, time and state dependent. If the answer to the question is then resolution, then we need to identify indeed what is the best. The most appropriate resolution approach. On the issue SPE versus MPE versus hybrid, I think the main point is that, of course, that's a judgment which is based on a case by case, and it would reflect to a large extent, the structure, let's say, of a group. In general terms, to the extent we have a group where all the elements are highly interconnected, or where the functions are highly centralized, we would have an inclination towards a single point of entry strategy, while when a group is structured in a way where, all components, subsidiaries are somewhat autonomous, then, there would be an inclination for, let's say, MPE strategy. And the realities might always be a bit more in between. So that's the reason why an hybrid approach, combining the two, might be also an option. Once this choice has been made, the following choice to be made is indeed what is the best, let's say, resolution tool. Now, here, I have to say that's an area where I think we are still learning by doing. So far, a main assumption has been, at least for the main banks, which are under our direct responsibility, that the bail-in would be the preferred approach, due to the fact that, given that we are really considering large and complex institution, it would be very difficult to think of alternative approaches, because all the other approaches which can be labeled under the general heading of transfer strategy, because the establishment of a bridge bank, or the establishment of an asset management company, or sale of business. Now I remember which one was missing before. Would not really be, suitable in case of large banks, or at least it would not be possible to go for that kind of option in a short period of time, like the weekend in which the decision should be taken. But that's an area where indeed I think we will, further develop our thinking in terms of identifying general criteria under which, a tool might be chosen versus another. Quickly on the last two topics, another fundamental part of the resolution plans is the resolvability assessment. As I said, in general terms, this is it relates to the question, okay, we have now, let's say, identified a resolution strategy and a resolution approach. The question is it really feasible concretely? So, if we have to implement this approach, is something that we can do, without any obstacles or in an efficient and effective way. And so that's the essence of the resolvability assessment. So the extent to which, the resolution plan is actually implementable in practice. And that's an area where, of course, in drafting the resolution plans and in making progress, we are trying already to identify potential, let's say, obstacles. And here you see in the slides a number of topics which might represent, obstacles to the realization of, let's say, a resolution strategy. First of all, insufficient loss absorbing capacity. This has to do with MRL determination. It might have to do with, difficulty to ensure operational continuity. One example might be continuity of access to financial market infrastructures. It might be a very important point, an inability on the side of the bank to provide all the information which is needed at the moment of resolution. But then let me just restate a point which is very important for me, notably that one possible impediment to resolvability is the inability of the banks to provide relevant information to the resolution authority at the moment of resolution. And this has to do with the ability of management information systems of banks, which is very important considering the time pressure under which a resolution authority has to take decision at the moment of resolution. Now, bail-in, I said for the time being, is the most recurrent resolution tool that we envisage for our bank, and there are a host of, let's say, execution issues relating to bail-in, if anything, because, as you know, in the end, bail-in will have to be implemented in a national context, and there might be national specificity, which might have an impact on the way in which bail-in can be implemented. The issue of funding, both before and after resolution, is also a topic which might represent, a potential impediment. And then there are a lot of issues relating to the cross-border nature, like, for instance, the question of mutual recognition of, resolution decisions in third countries, so outside the European Union. To the extent that any of the impediments, and there might be others, this is just an indicative list, are identified as substantive, then the legislation imposes on us a particular procedure to deal with these impediments. So we would need then to take a pause on the resolution plan and to start a formal dialogue with the bank to see how these impediments could be removed. And to the extent that the bank will not take itself initiatives to remove these impediments, we have a list of powers we might activate, to remove these impediments. Powers which, can be really invasive in a way, and have an impact on the structure and the business of banks. So I think here the hope is always that the bank themselves would be inclined to take on their own initiative actions which would remove these impediments. And finally, but certainly last but not least, the topic of MRL. As I said, MRL is a key element of the resolution plan, because in essence what we try to do with it is to determine an amount but also a quality of, let's say, resources which would be concretely available at the moment of resolution, to finance, let's say, the resolution strategy which has been identified. It means that there should be resources to do two things. First of all, to, let's say, absorb the losses, which would be let's say, the sources of failure. And second, to provide an amount for the recapitalization of the entity coming out of the resolution action. Now, this entity can be either the same entity to be restructured under a bail-in approach, or can be, under a transfer strategy, simply a new entity. It can be a bridge bank. It can be maybe a bank which is very much streamlined because a lot of assets have been unloaded. So that's the main purpose of, let's say, of MRL. Now, the determination of MRL, it's an incredibly complex exercise. First of all, you need the data. You need data about the structure of the liability of banks. And unfortunately, that's an area where we couldn't really rely on the supervisory reporting. You know that we try to the maximum possible extent for our data needs to draw on the supervisory data in order to avoid that burden on the industry. But as you know, the supervisory reporting is very much focused on the asset side of bank, on the riskiness of the assets. For our purposes, it's more relevant to have detailed information on the liability side because, once again, that's the part of the bank which needs to be looked at when we will need to, to implement the resolution strategy. So we need to establish, an ad hoc data collection, which, by the way, was, was a very lengthy and I would say burdensome exercise, but I hope this was also useful for banks themselves. And second, of course, we have to define a policy on MRL in a context in which, as you know, the regulatory framework surrounding this topic is evolving because there is this proposal by the Commission to transpose the TILA framework in the EU legislation. In that context, the entire MRL approach is also being looked at, and so we need to bear in mind that there might be changes in that field. So, as I said, we have developed, to a certain degree already a policy. This has been made public. We published our approach in 2016. Which was primarily a mechanic approach. We moved slowly but progressively in 2017 towards, a more bank-specific approach, which is very much in line with the nature of MRL, which, as you know, is a Pillar 2 type of, in a way, of instrument. And the objective, as I already mentioned at the beginning, is to be able to determine in the near future first binding requirements at consolidated level for, let's say, a subset of banks, notably the ones which are highest priority in our radar screen. So, all in all, this completes my presentation. I hope I was able to provide you with useful snapshot of main elements of how we do our resolution planning, and I understand now we move into the question and answer. So I give the floor back to you, Pierre, if I'm right.
Yes, exactly. I mean, thanks Mauro for the panoramic briefing. I found it very useful that you, among others, recalled the basic but fundamental distinction between resolution strategy and resolution tools, which are quite different concepts and have different ramifications. I think we'll expect quite a few questions on what you covered, but before that, let me ask Sophie to turn on her mic and camera and share them with us so that we can address the different polls that we're asking now. Okay, so you're there.
Hi,
perfect.
Good afternoon.
I leave you
my name is Sophie Steins Bisshop. I joined the SRB almost 2 years ago, and I'm also working for the unit responsible for developing policies and methodologies which should feed into the resolution plans. And today I'm here to assist Mauro with the Q&A session. And we would like to kick off the Q&A session with 2 polls. And the first poll is on our first case that we had here this year. And just to give a short background, so the question is which resolution tools was or were used for Banco Popular. So the first answer is bail-in and a sale of business. The second is bail-in and asset separation. The third is bail-in, and the fourth is a sale of business and bridge bank. So just to give you short background, this year we had our first case. So in that case, we had to move from resolution planning to resolution execution. And as you're probably aware, that was the case of Banco Popular, which was a key lender in Spain with total assets of about 150 billion. And the bank faced acute liquidity problems. So in beginning of 2017, there was a substantial deterioration of the liquidity position, mainly driven by the depletion of depositors. So on June the 6th this year, the ECB declared the bank failing or likely to fail, which meant that we had to decide whether the 2 other resolution conditions, which Mauro already mentioned in the presentation, were met or not. So the SRB determined that the second and third conditions were met, so meaning that there were no private solutions, given that the sale process initiated by Banco Popular had not led to a positive outcome. And also the SRB concluded that the resolution was in the public interest, mainly because the bank had several critical functions, for example, deposit taking and lending and payment and cash services. And the bank was also very important that in the economy, because it was the sixth largest bank in Spain. It was also classified as an OC, so another significant important institution according to the EBA methodology. And so it was a key market player in Spain, with particularly a significant market share in the SME segment. So given that the objectives were met, we had to move to resolution execution. And what the tools that we use, I see that most of you have it correctly. So we used the sale of business tool first. So the SRB transferred all the assets, all the shares and the capital instruments to Santander. For the purchase price for the shares and the capital instrument was €1. And we also used the bill-in tool. So we decided to exercise the power of write-down and conversion of capital instruments prior to the transfer. So all existing shares and additional Tier 1 instruments were written down, while all the Tier 2 instruments were converted into new shares. All right. So the second poll relates to the methodology for identifying whether a function is critical or not. So we have several options here. We say a function is critical when it's crucial for the viability of the bank, it has a high national market share, it supports other important functions within the group, or its discontinuation has a material impact on third parties. So as Mauro explained before, we developed a new guidance and methodology for identifying critical functions. And the reason was that we saw large discrepancies across banks in the way they identified critical functions in their recovery plans. So they use very different methodologies and also very different indicators. Some applied a very rigid approach where they, for example, use quantitative thresholds, for example, saying that all the market shares above 10% were, for all the functions that have high market shares, were critical, while other banks applied more qualitative approach where they mainly relied on expert judgment or qualitative criteria. So the SRB recognized that there was a need for further guidance on this topic and also to be consistent across banks. So as a first step, we a task force. So the SRB worked together with 10 NRAs, the ECB and the EBA, to develop a template and guidance with key indicators and criteria for criticality. These indicators were both of quantitative and qualitative nature, and we did not use any thresholds. So this methodology and template was first tested among a pilot group of banks, and this year it was rolled out across all institutions. So we are using this methodology now in this year's resolution planning. And I can see that most of you have the answer correct, that indeed it's answer C. So this methodology also indicates certain indicators. For example, market share, which is one of the options of the poll question, is used as one of the indicators to assess the impact of discontinuation on third parties. So market share is not the only indicator for criticality, but is one of the toolbox of indicators that we use. Other indicators, for example, are the value of the cross-border asset, cross-border position of a function, and also the number of clients for assessing impact. But we are also using qualitative indicators, for example, to determine whether the function is substitutable, yes or no. Examples for that are whether the fact if there are legal barriers for taking over the function, whether there are operational requirements. So banks have to assess that qualitatively as well. And we're also using indicators such as the market concentration, the estimated time for substitution, and all these indicators should lead to the conclusion whether a function is critical, yes or no in the end, without any fixed thresholds. So why answer A and C are not correct is because it's also partly covered by the presentation before. The critical function should not be mixed up with core business lines and critical shared services. So the key difference is that critical functions are provided to third parties, while critical services can also be provided internally. And also critical functions are important for the financial system and real economy, while core business lines are important for the bank itself in terms of profitability.
Okay.
All right.
Thank you very much. There are 3 questions lined up, one by Fabian, one by Alessandro, one by Bodvain. Shall we start with the clarification question on bail-in versus conversion of capital instruments, the question by Fabian? So basically, Fabian is saying, isn't it, however, in any case of banking resolution, necessary to write down and convert relevant capital instruments prior to the use of any of the resolution instruments?
Yeah, Fabian is right. There is indeed, in light of the regulatory framework, this obligation as soon as the banks reach the points of non-viability to write down capital instruments. But it's true that we, let's say, wrote down not only capital instruments, but, you know, also, well, in a way, it's true. Yeah, it was also 80 additional capital instruments. So you could say that. But I mean, simply in this case, there was no need for, you know, going farther the line, notably to, let's say, bail in also senior debt. That's what happened in the case of Banco Popular. So, in that sense, yeah, I mean, it's true. I mean, let's say you could argue both ways. So it was both part of this obligation coming from the regulatory framework, but it was also due to the fact that due to the amount of losses, we didn't need to go beyond, you know, the amount of shares and, you know, and tier 1 and tier 2. So in that sense, yeah, I mean, let's say bail-in was not done to a full extent, I would reply.
Okay. Thank you. Moving first to the question of Bodvain, because it's more general, and then the more practical question of Alessandro. So Bodvain is asking about the alignment between the criteria and templates in recovery and resolution planning phases.
Yes, I mean, as I was mentioning in my presentation, we aim at having a full alignment between the ECB and the SRB in terms of methodology for identifying critical function, critical service and material entities. So we are cooperating very closely and, you know, we are at a stage where we can say that indeed it's the same methodology which is used both by us and by the ECB. I reply to the question of Budavin. The question is, how were the critical function assessed for Banca Popolare di Vicenza? Well, I mean, the methodology that we have identified applies across the board, so there was no particular or specific approach for Banca Popolare di Vicenza. As I said in my presentation, the key point there is that we came at a conclusion at the moment of resolution that you know, the public interest assessment was not satisfied, in the sense that at that particular moment, both for both Venetian banks, let's say the conditions were such that, you know, they did not the requirements for going into resolution, both in terms of critical function but also in terms of financial stability, were no longer there, and so liquidation appeared to be, you know, an option in terms of satisfying the public objective in the same way as resolution. And I have to emphasize that indeed, you know, this was a different judgment from the one we had at the beginning of this process. When we started the resolution planning for these two banks, you know, at that moment, the two banks both satisfied the public interest assessment criteria. As I said, that's something which is time and, you know, and state dependent.
Okay. I can see that multiple attendees are typing, as you can see too. In the meantime, may I ask you, just to prepare a bit the ground, a lot of the tools and methodologies that you've been setting up over those past years are completely new. I mean, it's really starting from scratch. Is there any international example or a standard that you could relate to when doing all this startup job analytically, let's say?
Okay. Well, I would say, Pierre, that from a conceptual point of view, the instrument which have been introduced by the BRD are certainly new, but it's not that they were not known before. In a way, partly they've already been used, let's say in the past, but they were known. The very fact, and this is confirmed by the fact that, if you take the most important international standards, which are the key attributes of the Financial Stability Board, right, which define the general framework for bank resolution across the globe, they make explicit reference to these, to these instruments. But of course, they don't go as far as to cover in detail how this tool should be used in practice. And it is not possible, I would say, in a global context, because, as I said, there is a lot of, let's say, national specificity in implementing these tools, which has to do indeed with the nature of national legal framework, which of course cannot be really looked at in such a global context like the Financial Stability Board. So that's a challenge for us as a resolution authority of the of the banking union, to see how we can implement, for instance, bail-in in all countries of the banking union. I can tell you, it's not the same thing implementing bail-in in Germany versus implementing bail-in, I don't know, in Italy or in Spain, because once again, each country has its own, legal specificity, which will have a bearing on the way in which, the decision on bail-in will be implemented. But this applies, pari passu also to the transfer strategy, establishment of, for instance, of a bridge bank. Also there might be national specificity which have relevance for the way in which a bridge bank would be let's say, established. And, always remember this key point, that it's also a difference with SSM, in the sense that we are responsible for taking the resolution decisions, but then the implementation of this decision is the responsibility of the national authority. It's another confirmation of this notion that, implementation of resolution is something which has to take into account the national specificities.
Okay, thank you. Maria had a question on bail-in and competition concerns and the long-term and short-term solutions. Did you have a look, Sophie, at the question?
Yes, I had a look at the question. But in general, I would like to say that the choice of the resolution tools is mainly related to the resolution objectives. So, as a resolution authority, we're first assessing whether a bank has to go in resolution or can go in liquidation. So meaning that we have to see if the conditions for resolutions are being met, and if so, we have to see, if we go to resolution, what are the right tools to ensure that the conditions are being met. So the recurrent use of the bail-in tool mainly relates to the fact that we see that this is the most effective tool in meeting the resolution objectives for banks that cannot go into liquidation.
Yeah.
I don't know, Mauro, if you want to add something.
Indeed, there
about
might be also
competition
dimension in the, let's say, in the resolution decision. The most recurrent case would be the one in which we would contemplate the use of the single resolution fund. This is supposed to be a sort of, exceptional event, to the extent that, what we have built within banks in terms of MRL might not be sufficient at the moment of resolution. Then there might be a need to use, let's say, the fund, but the use of the fund by itself is regarded as, a state aid. Even if, the funds are provided by the industry, the very fact that the use of the fund is determined by a public authority, in this case the Single Resolution Board, leads to the conclusion that, it's equivalent to, let's say, state aid. So in that case, indeed, we will need to consult the DG competition to make it sure that they have also their saying on the use of the fund. I would say that looking at the condition DG competition normally, let's say, requires for state aid, notably the fact that should be burden sharing, I think this would be certainly absorbed by the notion by the notion of bail-in. And turning also to the other point, there is also this other dimension of the Commission, which of course has a say on our draft decision. And as said by Sophie, indeed, one main area where the Commission might have a say is indeed the public interest assessment. They might diverge in their judgment. And the other area where the Commission might intervene now, regardless of the competition dimension, is the use of the fund, the entity or the quantity of the fund.
So Henri had a question about Euro-specific guidelines on continuity of access to FMIs in resolution, and Andrea on the hybrid between SPE and MPE. Who wants to go first?
You want to take the first one?
So we have published, we don't publish specific guidelines. What we do publish is operational guidance both for banks and for resolution authorities to assess different aspects within the resolution planning phase. So last year we published our so-called resolution planning manual, which for each chapter provides guidance on how to what we require in the resolution to be in the resolution plan. So in terms of our work related to access to FMIs, there's currently a work stream covering this topic, and we will update the manual so that is published on our website based on our new experience and findings that were and policy recommendations that we are first considering internally before we publish it externally. But in the current version of the manual, you can already find a chapter on operational continuity and also the continuity of access to FMIs.
Thank you very much, Sophie. Mauro on hybrid, please.
Yes, on the hybrid, how would it look like? I think the most recurrent example would be the one in which you think of a group which has quite an extensive cross-border footprint beyond the banking union, and so you might think, and again it depends very much then on the structure of the group, but could be, for instance, a combination of SPE approach within the banking union complemented by an MPE approach outside the banking union. So this could be one example where you would use let's say an hybrid approach, justify on the fact that the structure of the group is such that for the banking union part you see a lot of interconnectedness, while turning into the let's say outside the banking union, maybe there are subsidiaries which are more autonomous.
Okay, I'd like to warmly thank Sophie and Mauro for their time and dedication, and apologize for the occasional technical issues that we have had. Thanks a lot to all of you for the questions, comments, and thanks for watching us. More information on our upcoming online seminars will follow shortly, so stay tuned, and in the meantime I wish you all an excellent afternoon. Goodbye.